So the US government shut down last night. What exactly does that mean? I don't know. And I don't really care. What I'm going to talk to you about today is what does this mean for the market as investors, market participants, and do what I normally do, which is calm everyone down, remind everyone not that big of a deal, and let's actually look for things that matter, like quantitatively trading the markets, where we're going and using backtests and using ideas and using statistics like this to make sure we're not falling victim to like a media narrative about how scary things could be. So first of all, just not to hide the lead, if you look at this chart, this is every government shutdown since the 1990s and the returns during that shutdown window from when it was shut down to when it opened up. You can see we had a few, and in that case, in most cases, it was nothing, right? Down 2%, up 1%, up 3%. And then the big one that happened in 2018, 2019, up 10% there. So let's take a look at each individual chart. So what I did is I went to, and explain why I'm doing all this as well, but what I did is I just went to TradingView and I took each of those dates and I said, okay, if the government shut down in November 1995, what happened? And for this particular, it was only shut down for 4 days, right? So we're in here, and then 4 days later, really nothing would have happened. But after that, it's a great little return to have, right? For the 2013 shutdown, this was just another few days, right? No big deal. It was 17 days. So you made a little bit of money on this one, a little bit of a sell-off, a little bit of pullback. In this one here, it was actually good that when the government opened back up, that's when the market seemed to give way. And then over here in the 2018, you can see was the shutdown was like the low of the market. So most of these cases, I would say it doesn't matter. I wouldn't look at this and say it's bullish. I wouldn't look at this and say it's necessarily bearish. I would say this is just a non-event. The markets don't care because the markets look further ahead than that. The main thing that I wanted to show you guys is, as opposed to doing what a lot of people do and go to, some sort of CNBC or something like that, it's the world of AI. So why not use it? So this is just the prompt that I use. This is Perplexity. ChatGPT would probably give you about the same. So look at what government shutdown means for the markets. Look at all prior shutdowns, what happened to the stock market 1 month and 1 year out. And I even misspelled. I even did a little weird typo there with out. And it did all of these, but I'm like, I don't really care what happened in 1976. I don't know if that's relevant. So I just did a little tweak and say, hey, give me everything from 1990 till now. That's, 25 years, 35 years of data. Let's see what happened in the last 35 years. And then there's this chart, which just shows, I have this one a little bigger over here. This is 3 months out, 6 months out, and 1 year out. And you can see that in most cases here, on average, we are actually quite positive after a government shutdown. Now, in most cases, 1 year out, the market is positive anyway, right? The market goes up on average. I think it's 8% a year for this period of time, and it's up 75% of the time. So what I really wanted to go over and, talk about this, and if you want me to do this kind of analysis on more current events periodically, whenever something pops up that I think I can add some quantitative flair to, let me know. Again, comment and like and retweet and subscribe and all that stuff. But I think the main thing to do is to remember that, like we know, medias and social medias and bear only newsletters and things like this, they know that they could sell more if they scared you, right? If you were scared about, what is the government, the government shut down, it's scary, it's going to crash us. And it's not nearly as interesting or lucrative to say this is actually what happens. And in most cases, not a big deal. Up 3%, down 1%, up 2%. That's just normal market fluctuations, right? It's not something you want to focus too much on. And that seems to be what this event is. I did the same thing with the whole Iran-Iraq thing that happened a couple months ago. Again, I don't know anything about these events, and I don't really want to. I just want to know what is the effect on what I do as an investor and what I do as a market participant, because I don't even live in the country. So it doesn't affect my day-to-day. And I would hope and I would think, as traders and investors, that should be where your focus is as well, is what does this mean for overall markets? Now, as of recording this right before the open on Wednesday, the market is gapping down 0.5%. It does not that big of a deal. We don't know how long these things are going to last, right? This time could obviously be different. That's only a 6 occurrences that we're looking at. We're not looking at thousands of occurrences. Like when I run a back test, there's tens of thousands to hundreds of thousands of trades so that I can be really confident in what's going on. We're looking at 5 or 6 examples, but it just goes, and when I look at that data, it just shows me I should not be focused on this data point. This is not a data point that is interesting to me as a trader and investor. I should focus on the other data points. What is the market doing? What is price action telling me? What are my algorithms and statistics? What are these pointing to? What are these telling me? And by focusing directly on those things, that will help me actually make money in the market. Not so much looking at government shutdown. So I hope this helped. I hope this is something you guys are interested in. If so, just let me know, and I can turn on the camera whenever an event like this is happening that I can give you guys some statistics behind.